So in this chapter we're going to be covering NASDAQ textbook longs. A long trade simply means the objective is to buy low and sell high. And there are a couple of different chart patterns that Nate likes to look for when he's looking to buy into a stock. The first we're going to discuss is the ABCD setup. And this is really a great trade for a beginner or an intermediate trader, as it's got a set risk. They're very easy to identify. There's no need to search for borrows or have a broker with extensive borrows. And the market's been hot for the last couple of years, so these patterns seem to be really working well. And even when the market's cold, the ABCD pattern works great for a bottom feeding kind of trade in terms of longing a trade that's perking off the bottom. And it's got a positively geared reward to risk ratio built into it. So it really is a great setup to have in your trading tool belt. With all that being said, Nate has much better intuition on the short side than he does on the long side. So we had to search through quite a lot of data to put together this chapter of the DVD for you guys. But I personally know a lot of guys in the Investors Underground community that make great money off the ABCD pattern. We put together a comprehensive chapter that explores all of these NASDAQ textbook longs, and we're about to dive into the action now. So basically the ABC trade is built around the ways that stocks move upward. And a lot of people say, hey, buy the dip or buy the breakout, but without the right approach to risk and making sure you get paid out the right reward for it, that advice is only half true. So for example, let's call this blue line a large upward move. You don't want to chase this and buy it long here because you don't know where the pullback's going to be and you don't really have a defined risk to base the trade off. So what we found in our experience is there's a better way of getting long on a stock that's trending higher without risking as much and also getting more of a confirmation that the stock actually does want to move higher rather than chasing something that's already running upward. So right now, as I said, you're looking at that large morning move, but what we're going to be looking for is some kind of pullback that's going to get our attention. We're going to start monitoring this and essentially looking for a scenario where there is a higher low that might suggest to us that this stock isn't going to go and give back all of its push, and it might spend some time at a slightly higher price point and set up for the next piece of this trade. So we're not really ready to buy this yet because we don't know where the bottom of this pullback is going to be. We still want to find that defined risk that we know we're going to be getting paid out on. So now let's say the chart has made a higher low, but at the same time, it's also sort of made a lower high. So we're still not entirely ready to buy this. You might consider starting in with a partial position if the daily chart is really set up. But if, let's say, this initial move upward was a very large move, there could be shorts looking at this, saying that this is actually a lower high and it's going to retrace some of those gains. And that can be one of the reasons that the ABCD pattern gets propelled if it does make an up move. I'll discuss a little bit more about that in a moment, but from a long perspective, this chart has now made a higher low. It's already on people's radars because it's made a nice big move. Predominantly in the morning, those kind of big moves happen. And right now, what you're looking at is the textbook ABC part of the ABCD pattern. And you've got A, which is the push. You've got B, which is the subsequent pullback. The chart's showing that it's making higher lows. So as it perks off this level here, I'd consider that C, and you're looking to buy anywhere within this box or even slightly above it with your risk on B. And for the more novice traders, you might like to set a hard stop under B. Nate doesn't use hard stops because he likes to leave a little bit of wiggle room. If someone goes and hits a bid and it takes a quick spike to the downside and comes right back up, he doesn't like to get stopped out in those scenarios. But basically what you're looking for is to risk down on B. If you're getting paid out the proper reward on the risk to B and the chart starts to top out at that A area, you can actually consider locking half as long as the reward was relevant to the risk that you put. However, the real idea of the ABCD trade is to have it break that previous high of A. And often when it does, it's pushing onto the high of the day list. It's going to get on people's radars and they'll cause the move from that previous high of the day up towards that D level. So a lot of the time you can be getting paid out between 2 to 1 on your risk up to, 4 or 5 to 1, which is a really ideal circumstance. The thing that really excites me about being able to go over this stuff with you is that the ABCD pattern doesn't look perfect every time. There are variations to the way that this is going to manifest visually on your charts. And by going through 10 or so examples of this pattern, you're going to understand those variations and be able to start identifying it for yourself. Let's go to Nate with the live action.
Glue is a perfect example of a daily chart breakout where it's had a nice big gap, it's got a lot of volume, and now people have it on watch and they're waiting for that next breakout. It had that big gap up day, and there was the typical profit selling that you would see in the days after, where people are just looking to take a little bit of profit off the table, which could create a tiny bit of downside for the stock, even though there was good news. Then once the new buyers come in on the news and the profit takers are out, it's going to start to head back in the direction that it was headed. So in the event that it's going to break through that 5, I want to be able to risk something around the 490, 495 level, anticipating that 5 break and then letting it ride for the breakout. So we've got a nice big volume spike here, and that's where I ended up getting long. I started in 6,000 shares and then doubled up, adding to the position when I saw it cross through that 5. You can see that we had the week open, started to grind back up towards green, and it was holding. And it was testing that 495 level all day, and it was topping. And it was at that point where it broke that I'm now interested in getting long. So I went ahead and got long, and I'm using that 490, 95 level as a guide. Basically, as long as it holds that 5 level and doesn't start to fade off, then I'm going to go ahead and stick with the trade on the long side. Now keep in mind, it's going to pull back, so you need to be able to trade a size that you're comfortable with. And for a lot of people, 12,000 shares is not that size for you. You need to do something that you're okay with risking towards that 495 level, which was the prior top, which now technically should become support. Many times when these stocks do break over that whole number mark, as you guys know, the 5, they might want to retest 5 over and under. And as long as it holds over that 5 area and it doesn't start to top out there, I'm going to go ahead and stay with the trade. You can see that it started to hold higher lows, and if you weren't in this when I had originally gotten in, now you can use this higher low as a set risk first reward and be able to anticipate that ABCD type breakout towards the higher days. So I went ahead and just locked in a 4th just to go ahead and pay myself a little bit, give myself a little bit more wiggle room while the trade starts to pan out. You can see that it's starting to hold higher support again now, and it's retesting towards the high days, and I locked in another third just to go ahead once again and pay myself a little bit, because I have a tough time with patience. And if I can go ahead and just take off a little bit, it gives me the ability to take a step back from the trade, let the trade do what I thought it was going to do, rather than watch every single tick and get worried about where it could go. I do have a bad habit. Once I start to take off a little bit of profits, I start to keep on selling, selling, selling. Nice trade over $1,000, so usually I'm pretty content with that unless I'm looking for more. So I went ahead and locked in a little bit more, and once again, trying to have patience on the last little bit until it either makes or breaks the trend. You'll notice that this is actually trending very well with the SPY, so I went ahead and locked the rest in when the SPY started to pull back. The other thing to note is it's right around 3 p.m. right now. So 3:30 p.m. plus, I like to lock some in because there's a good chance that into the last half an hour there'll be a pullback which I can be able to take advantage of and then reaccumulate for close. You would usually see me call it the premature breakout, meaning everybody's all excited for that end of day move, but hey, we still got another hour, hour and a half to go. So it's best to go ahead and lock in, because everybody that was just buying for that end of day breakout, if it doesn't hold trend, they're going to be a seller before the close. So once again, taking a step back and looking at this chart, you can see exactly what we were looking for. You can see the line here at the top at the 494, 495 level, and then you can see the volume come in. The volume is what tells the story. We want to anticipate that 5 breakout. We can always add to the position later. Once it breaks through that 5, there's a good chance that it might want to retest, and that's normal. Typically it goes over and under, retest over and under, and as long as it holds trend and it holds that higher low, as you can see here and here, should maintain trend and continue higher. And you can see a nice little ABCD type breakout where those higher lows anticipating that high a day and off towards 520s. You can see here on the daily chart that this is definitely something that I'm going to be interested in the following day. Now you've got a 52-week high breakout. So every dip in the morning that I can anticipate that red to green move, I'm interested in for the continuation of the breakout. Facebook here has been beat down for the last couple days. So it went from basically 64 to 60 down to 56. So you've got about an $8 pullback that I'll be looking to take advantage of off dips as long as the trend holds. You can see I'm using the market as a guide because Facebook definitely follows the SPY quite often, and you can see exactly how that works right here where it's very active and it's got a lot of range in the morning. You can see when this is hammering down, this is too, and then when it starts to rebound, so does this. And you can see really why I'm watching the SPY for a lot of these stocks, just to kind of have that idea of what's going on in the market. So I went ahead and started into Facebook here, and I'm looking at two things. The first is you can see in the morning where it had come down and then it started to find support here. If you draw a line across, you can see that this area of support where it broke out from ended up holding as support intraday. So I wanted to go ahead and start into that, knowing that the daily chart was extremely beat, and this is due for a bounce. I'm not trying to predict it and add on the way down. What I'm doing is I'm going ahead, starting into it, and then what I need to see as a confirmation is 56 over and under to hold to verify what my trade idea is. If 56 were to actually peak out and start to fade off, then I would need to consider going ahead and taking the trade off. I have a sell in right up here. You can see this little arrow. And I just went ahead and sold half. Sold a little bit more. And I've got 1,000 shares left. So I've got $1,700 locked in. And once again, you can see clearly why I watch the SPY to anticipate what may happen over here on Facebook. And I ended up selling out the rest. As usual, sold a little bit too early. Nice little breakout towards the 57 mark. So we knew Facebook pulled quite a bit on the daily chart. We knew that it's very due for a potential bounce. So I went ahead and chased a little bit more. And this wasn't the best entry, but the most important thing here is to have a plan. So I went ahead and chased it up a little bit. I do have realized gains, but I have a game plan. So when I add in, my plan is based on 56.50's mental, whole and half dollar marks. I'm not risking towards 56. All I want to do is I want to scale in based on that 56.50 number. So I'm okay with it going there, but if it peaks out there and starts to fade off, I need to go ahead and cut my loss. If it starts to base there and continue its trend, then I'm good to go and I let the trade work for me. You can see ABCD type pattern here, higher lows, higher lows, higher lows by this line going up with a peak right here. So now that it's busted through this prior top area, this is when it's going to start to get a little bit more fun. And just reminding once again the chat, sometimes I didn't particularly anticipate that it was going to pull back as far as it did. Although I was okay with the size, I'm going to go ahead and size down because I did have that one ad bringing it to 6,000 shares, which is not necessarily a starter position for me. So I wanted to go ahead and take a little bit off the table, at least give myself a little bit more wiggle room to let this trade work out. You can see the relative strength versus the SPY, which is another thing to be looking for. So you can see that it's starting to fade off here on the SPY, whereas this is actually holding trend. So that's good because now if the SPY rebounds, this is going to go up twice as fast. I've locked in a little bit more Facebook just while it's strong. I already had a decent position. I just locked in the rest. You can see that it started to speed up as soon as the SPY started to come back, which is nice because now it's starting to break out towards the highs. So now I just got my low average left on Facebook. And I locked it in. There wasn't really a reason to sell Facebook at the time, but as I've said numerous times, once I start selling, I just can't stop. So I would be looking to rebuy this thing on dips, but at this time the trade is over for me. And you can see that SPY starts to get a little bit wild, so it's nice to be out. So again, taking a look back, you can see pre-market, 8 a.m. has a nice little base at this 55.75. Keep in mind on the daily chart, this has been down $8 in the last 3 days. So what I'm looking for is any way that I can get long with a good set risk versus reward. So it pops up pre-market, starts to consolidate right near open, and it pretty much holds that 56 area. So that's going to be a interest point for me later on. Missed this entire move, pulls back, retests that level, and it holds. So that tells me that this prior support is acting as the intraday support. Then I started buying dips with that set risk, knowing that I wanted to risk on that whole and $0.50 mark. And for tomorrow's trade, what I'd be interested in is any weak opens for that red to green.
So the next trade example we're going to share with you is IDTI, and this is another one of those long ABCD trades. The daily chart's breaking out, but intraday there are a couple of reasons why I want to share this specific trade with you. The first is to show you that using small size and patience can really add up to some great profits. The second reason is that I wanted to show you guys the different ways that the ABCD trades manifest. Every time it's not going to look perfectly like the animation at the start of this chapter looked like. There are slight variations to every ABCD trade, but by going through all of these examples, hopefully you're going to understand the different way these charts look and end up playing out. Let's go to the intraday chart now. So it's about 10 a.m. Eastern time in the morning, and this stock has had a slightly weak open, it's moved green and spent around half an hour consolidating. Now it's perking off that consolidation level, and if you have a look, this is the kind of A, B, C action, and we'll see if it plays out, giving us a D and maybe some profits. Let's go to Nate's commentary now.
You can see I started to get long here, very small. Just a feeler trade out there to see how the trade reacts. Had a nice little weak open, started to grind sideways, came down a little bit, held on to green for the day, back over that 14, and then we got the volume and the pop. So I went ahead and just chased a small little bit just in case it wanted to come right back down to 14, and then I'll make decisions from there. You can see once again I made the trade and I've got a plan right away. I'm risking over and under this 14 mark with a mental stop on the 90s, which is basically the low of days. I want to let this trade work. I've added a little bit more in, and you can also see right here, there's a little small green arrow, which I also purchased long in ETC, which is my other account. Now looking back at the daily chart, remember this is a big 52-week type breakout chart that I really don't want to oversize. I just want to let the trade work for me, because if it does continue to break out, it's going to run all day. So I went ahead and took off a third. It's had quite a nice run, 14 to 1440 without any pullbacks. So I wanted to go ahead and just lock in a little bit. And once again, you can see using less size compared to how I've been trading in different areas in the DVD, I let this stock work for me. And that says something about, how size plays a role in what you're doing. Because if you use too much size, you might get a little bit too timid, and every tick really snags your emotions and really makes you double think, is this the right trade? Is this what I should be doing? And you're looking at the P&L and it's moving up and down too fast, and you start to react not based on the trade at hand, but rather just your emotions and how you feel. So this is a great example to show you, where sometimes less size is better if it allows you to let the trade work for you. So I went ahead and let it hang around a little bit, but it started to crack and then put in a lower high. So I went ahead and locked in the rest of the gains. Very nice intraday gain. You can see here once again the big breakout on the daily charts. That's why we're interested in it. If you draw a line across right here at the 13s, you can see that this has been a long time coming for the big breakout. Then it finally broke out, and then it actually reconsolidated again. And you can see the line at 1350s and the slow grind up with support right under there, so that we know when the volume comes and we break that high a day, there's going to be a good chance that we have a nice breakout. So it's all about being able to find that good risk versus the potential great reward intraday. And I think that was very well shown today, waiting for that trade, being patient, and letting the 52-week high breakout work for us. BBRY should look very familiar to a lot of people. We actually had an example of this on the first DVD for that week open washout, potentially a beat chart, and then that next morning you hope for a really weak open for it to wash out and then either nail it into the washout or add as there's higher lows, and then you can use the lower days as your risk. Keep in mind that this prior close was around 11.20, 11 bucks or so. And then it was down all the way down to the 10 mark. So knowing what you know, when a stock is down 10%, it's going to have the SSR on, or the short sell restriction. So all that means, it doesn't mean that you can't short it, it just means that you can't short the bid. You have to short into an uptick, which means you have to short onto the offer. So with that said, as a trader, you want to be buying into the washouts themselves. And this is not a trade for a lot of new traders, as you could end up in a pretty bad position if you're unfamiliar with how to react. What you can see here is I write in the chat room, BBRY, week open so far. I want to wash out in 950s over and under as the risk when I'm buying that wash. So know that when you see me buying, although it may look random, I'm buying with a plan in mind. I'm buying into that wash, into the panic, basically going on the other side of the trade, anticipating where, had I been long, where I might be panicking out. And as a trader, that's where I want to get long. I want to get long where people are freaking out. And with that, you need to have that idea in mind. And when you're buying these washouts, it's not a beginner type of play. It's something that you're anticipating the move. And with that comes an unknown risk. It could potentially fade and wash out to 950s and then go to 9. So you need to build that into your risk. You need to watch your sizes on that way down before it hits a bottom and starts to trend in the direction that you anticipated. Many times the most emotion is right at the open. So I went ahead and just started in a tiny bit. Again, remember, I'm sizing in based on the idea that this could very easily go to 950. And I'm okay with that. Starts to hit 970 a couple times, 970, 970, 970, 971, 970, 971, 970. So I went ahead and added a little bit more into those 970s on the bid. Again, remember, I'm anticipating it because the short sell restriction is on. So everybody that wants to short it can't short on the bid. And when it does reverse, it's going to reverse very, very quickly. Again, reminding the chat room, understand the plan, because although I'm buying, I have a bigger picture idea in mind. As you can see, ramps right back up. And that's why you have to anticipate when it's a short sell restriction. I went ahead and locked in some of the BlackBerry because it had a nice big push and then it just jumped up towards that 10. So I want to take advantage of everybody thinking that 10's coming and go ahead and lighten up a little bit. Give myself a little bit of breathing room. Now that the market has been open for a little bit, about half an hour or so, things have started to tame a little bit. And now I can use the low of days as a guide. So now basically all dips I'm interested in buying into those washouts with a risk based on the low of day. So once again, I'm going to be locking into all pops and trading around a position considering the size that I have. But remember, the goal with this is to buy all washouts and use this 970 as a mental risk in the back of your mind as that risk at hand. went ahead and sized down into that 10 break again. You can see the ABCD type setup here, curling up with that top at 990s. When it starts to break higher, you've got not only the volume, you've got the red to green move plus the 10 magnet. And remember, the more things that you can couple, an ABCD move, a red to green move, a whole number break, the more things that you can put together, the more powerful of a breakout you're going to have. And that's exactly what we had here. It was the ABCD type breakout, that 990 break for the 10 magnet plus red to green. And here we are at 1020 is the high of days. And I'm out of shares because I like to take profits along the way. And many times my patience runs dry. Again, taking a look back at the 2-minute chart without all the tickers moving around and whatnot, you can see anticipating the washout. Remember the daily chart was very beat. It's got the short sell restriction on. We want to buy into the washouts. Some of you may not have bought into that washout, which I would not suggest for new members. So you see this big move. It pulls back. Now you can buy all dips with a risk on this 970 level. That's exactly what we did, anticipating that 10 break and sold into that rush through the 10. And as far as the late day fade, you can see lower highs, lower highs, lower highs, and tying in with that whole basketball concept where it's bouncing off this base here at 1010. And then it finally washes out. And you can see by this line, now the support becomes the resistance. And then slow fade from there.
So this next style of setup is a variation on the ABCD trade, and it's pretty much an off the bottom kind of play. Instead of a chart having a big upward move, looking for a chart with a big downward move. But you might ask, hey, how do I get into a stock like this for a bounce? Do I want to catch the falling knife? And while scalping into washouts can be a quick way of flipping it for a few bucks, your risk is undefined. So in this next part of the chapter, we're going to be exploring this kind of higher low setup where a stock will put in a base after a big wash, set a line in the sand and pop through it. And if you have a look at this setup, it looks very reminiscent of an ABCD, except it's after a big washout. And sometimes these stocks like to go and retrace some of their losses and tick higher. And we've got a couple of examples of this for you. Let's go to the action now. So SRPT is the first of these kind of off the bottom plays that we're going to delve into right now. Basically for these plays, you're looking for a very beat chart, a big emotional washout move, and then a higher low where it's put in a bottom. You've got a set risk and you're able to take some shares and let it perk up off that risk, locking in gains into pops and potentially buying on dips. What you're going to notice is it took Nate a couple of times to really get some confidence with this trade and stick with it until it perked up. Let's go to the action now. And just a side thought on the price action of SRPT over the prior couple of days and then this day as well, there was a strong catalyst that pushed it down in this direction. It's a biotech or pharmaceutical company and they had some kind of news where the main drug that they were working on wasn't going to get fast track approval, which was really going to impact their progress over the next couple of years. Now, I don't pretend to be an expert or fully understand the way these things work, but you know when there's a catalyst in pharmaceutical or technology or bio stocks, these things can be the most volatile, and you really don't know where the bottom's going to be. Something to just keep in mind on this kind of play, you notice that Nate doesn't buy the washout. He's actually buying a higher low once it's put in a base, and he's risking the low of the days. He's not going to ride this thing down into the low teens, which is a mistake that I've seen many new traders do before.
SRPT is a very risky stock, and this is a stock that I typically would tell everybody to stay away from because you do not know where the bottom is going to be, and this thing could bleed all day. As you'll see, it's going to continue to go lower. So if I am trading, it's going to be a very small amount of shares. I went ahead and got long because I saw a nice little base come in right here. Then it rebounded. Ended up rebounding and holding that 19 area. So in my mind, I was thinking 19 over and under as a guide to go ahead and get long. And then I can risk accordingly. And then once it starts to trend, I want to use those 1950s as that guide. Because you can see, if you draw a line across, that was the prior support, which then broke, ended up as the top, and now became potentially the short. But given that this is a very questionable and sketchy trade, I went ahead and locked them in right away. I did not want to get any headaches. I'd rather let this thing fade off for the rest of the day and be able to find a much better entry where I can then add into a winner and look for the real rebound. So I went ahead and locked in the rest of the trade. I wanted to have a clear head, and I wanted to see what this stock would bring considering the bad news that was out this morning. I've been in these positions so many times before where you try to just make one of these trades work for you. You think that it's just down $3, $4, $5. In your mind, you think, oh, maybe it's down too much. And whenever your thinking gets like that, that's where some of your biggest losses come from. So it's better just to take a step back and wait for the trade to actually give you a good opportunity to potentially get long with a proper risk versus reward. And I really didn't have a good entry to begin with. If I did, I probably would have had a much wider stop. So at this point, SRPT has stopped some of the blood, stopped just coming straight down, and it's about 20 minutes after open. You can see that it ended up pulling back and it held a higher low. And that to me is very important because if it holds that 19 level and I can risk on the 1850s, which is the low of day, then I have a pretty good trade to go ahead and let work if it starts to trend. So again, you don't want to be in too much size until it starts working for you. You can see here that I added a little bit to it, and I'm going to use the low a day as my guide to risk. So now in my mind, 1850s is the area where I'm risking. I like the risk versus potential reward if this thing starts to rebound, and I'm going to let the trade work for me. Starting to grind up a little bit more. And I added in about half size to where I would want to be if this did start to go. And keep in mind, it's under the SSR, the short sell restriction. So that's why you see when it starts to grind, sometimes when it pulls back, it's very quick because the bids just sort of disappear. So that's why I've been interested in buying the dips versus really just adding at any price. Push to the 20s. Everybody's kind of anticipating it, just like the BlackBerry example where everybody's kind of anticipating that 10 break. So while everybody wants that 20 break, I want to start thinking about, hey, if this thing doesn't hold over that 20 area, I want to start thinking about locking in on that next push. So I went ahead and locked in half. Always easier to hold a stock when you're in a partial position rather than a bunch of sides, because you're continually looking at that P&L and you're letting it affect you psychologically. And if anytime you can lock in and know that you've already got a little bit of padding and you can let that stock work for you, you're going to find yourself having a lot easier time letting things trade. Went ahead and locked in a little bit more. Now just holding very small and see what can happen, whether or not it's going to rip up and I have patience, or if I run out of patience. I went ahead and locked in the rest, and I'm going to go ahead and see what it does the rest of the day. So now let's take a look at the chart. You had that morning washout, very, very beat chart, 28 all the way down to 20 into the 19s. Very similar to BBRY that we just looked at. You had that washout. You anticipate it, ramps back up. This may not have been for most people, and that's also why I did such a quick trade on it, because I was unsure and it really wasn't the best trade to take. But the better trade and the patience trade was once it had that higher low. And as you can see here versus the prior low, I can go ahead and buy dips all day with that set risk versus reward. As long as I'm locking in along the way, I can let the trade work for me. And once again, I didn't take this trade, but the point of all these videos is to kind of show you the trades setting up at different time periods. So you can see with this line here at 2150s, and then you see this gearing up action, higher low, higher low, higher low. It's getting tighter. Nice ABCD intraday pattern for this next breakout where you could have predicted that 22 to 23 move all the way up towards the 2350s. So you're talking about another $2 of upside with this intraday breakout ABCD.
SEAS, or SeaWorld, is the next chart we're looking at for that off the bottom kind of play. They had some bad news or bad earnings or something, gap down big, which put it on radar, and Nate was looking for the off the bottom kind of setup to trade intraday. Let's go to the action now.
SeaWorld is a perfect example of not adding into lows, but rather waiting for a stock to bottom. And once it bottoms, you can buy those dips with proper risk versus reward. And if you wait for that base to hold, then at least you have a set risk versus the potential rebound reward. And as you can see, I started in C's and I'm using 18 as a guide. And the reason that I use 18 as a guide is it's basically low of days. It's the next whole number. And I didn't purchase this before when it could have been just another one of these bases or another base here or another base here that none of those ended up holding. But what I did is I let it turn. And once it pulled back and it held a higher low, I was able to start in knowing that, hey, I've got about a 40-cent risk. If this does rebound, it could go towards the 20. I always like to warn people not to average down on these things because these are some of the ones that really blow up accounts the easiest because they don't think that it can keep on falling.
And I purposely left in some periods where Nate isn't speaking, just for the purpose of, as a trader, you're going to be watching these charts all day. So getting used to watching these tick minute by minute is sort of important. In your mind, you should be imagining what you'd be doing if you're in Nate's situation and getting a feeling vicariously for how you would act if you were in this trade. So in chapters 1 and 2, Nate talked about how sometimes being patient can actually bite you in the foot. Despite wanting to be patient, as you see, it's not always the best solution. And this is why he always likes to try and lock something in while the trade's going in his favor. Unfortunately, on this trade, he actually doesn't, and I guess you'll see the way that it plays out in the end. Back to the action.
Now this had a very nice big move. You can see T530 had posted a positive note. But what happens is a lot of times after a big downward move, these positive comments are actually used as the exit for a lot of funds. Potentially whomever was out putting that on the fly on the wall was actually exiting their position, and that's the unfortunate part a lot of times, and where I should have locked in. But given the range on the day, since it was down so much, I was trying to be patient, potentially get a nice little rebound towards the 20 mark. Unfortunately, patience doesn't always pay off. I ended up turning what was a $2,000 gain into a loser at this point. But again, I kept with my same plan, and my plan was basically off those lower days. So it had started to rebound back up, and after it started to put in a peak, I got a little impatient and I went ahead and locked in the profit because I didn't want to turn what was fortunately a nice gain again back into a red trade, which I had done already here. So you can see that I went ahead and exited my position. Just go ahead and protect. At this point, I was a little upset because I didn't lock in into this 19 parabolic, which you've seen me do in the last two examples with BBRY and SRPT. Through those whole numbers, when it starts to speed up and the volume comes in, I always lock in. And for whatever reason, I didn't on this one. But you're not going to nail them all. The biggest takeaway from SEAS is leaving the stock alone when it's in a downtrend. And here you could have gone ahead and got long, and you have a risk based on these lower days here. And it starts to pop, and there's a good chance that you probably would have gone ahead and locked in. But beyond that, you have a stop. You had a plan based on this 20 level, and if it goes and ends up fading under that, you're going to go ahead and take it off because you've got that set risk versus potential reward that you had already set up, because remember, every trade needs a plan. So that's exactly what I did here again. If you notice, I waited for the higher low. It started to rebound back up. I did not touch it then. At that point, it started to pull back, and when it started to hold trend again, that is when I was interested in getting long, because I was okay with the risk towards that 18. Now, it very easily could have done the same thing as before, but my risk was based off of those low of days. Once again, you're not always going to nail every trade to a T. Here I should have been selling. You can see the major volume that had come in, but I really wanted to let this trade pan out. And most of the time when it's a stock like this, if there's a bunch of positive news that comes out, and sure, the stock may jump, but if it does not hold on to that trend, you need to go ahead and start thinking about locking in as soon as possible, because it might be a situation just like today where that was pretty much the peak. Moby is a great example of a former runner that everybody should know about if they have been in the room for at least 6 months. And what I mean by that is if you go back about 6 months on the chart, you can see that this thing has had a huge move. So right away you know that, hey, this thing's got a history of running, so there's a good chance that if it does have good volume, if it has news, then it's likely that it's going to have a decent run again. So that's what puts this thing on my radar immediately. So I went ahead and started in very small on MOBI, and I'm going to add in a little bit, but stay at a very, very partial position. And the reason for this is because I want to see this thing wash out at the open, give us an opportunity to accumulate into that washout. However, I just want to start in so that just in case it does rip through that 8, I actually do have a little bit of the upside. I don't care about a little bit of a downside towards the 750s until I actually have any size. So going into this, I want to see a washout towards 750 as the ideal entry. However, if it starts to spike through 8, at least I have a little bit on just in case so that I can go ahead and sell into that pop. You can see the spike right at open. So now what we need to see is a trend that forms. And it's fine to go ahead and start in a little bit and at least have a plan in the back of your mind. So you can see here in chat that I mentioned that I'm adding Moby long using the 750s over and under as a guide. So I'm going in partial size, which is going to allow me to go ahead and let this thing wiggle. I might be early, I might be wrong. All it's done is really test this 760s twice, but the reality is it's probably going to test either 750s or 8s. It's very likely because those are the whole and half dollar marks. So taking a step back, letting this trade work out because I'm looking for that bigger picture move, heavy volume, former runner, and near a chart breakout. You can see that although it's based here a few times, it hasn't actually done any big breakout. And if it fails, again with a lower high, then there's a good chance that this is actually going to start to fade off and potentially wash out all those dip buyers this morning. So that's what we need to be aware of. So I went ahead and locked in a little bit just to play safe because I noticed that, hey, lower high, lower high, lower high, the basketball analogy that we've been talking about, it's likely that it's going to wash. So I'm going to go ahead and ideally stick with my plan, which was to buy the washouts and let that 750 over and under test a couple times. Not necessarily stop out at 750, but let it test that. Is it going to start to base at 750 or is it going to start to top at 750? And if it doesn't start to top, but rather starts to form a new support and starts to trend off that level, then I can go ahead and make a good decision, get long, and use the lower days as risk. Now you can start to see Moby start to rebound. So now I'm interested. And the ideal entry is on dips along this trend, as long as that 750 now holds as the support level. So you can use the low a day, which is 747, as you can see right here, and basically size in whatever size you want with that as a mental risk. And I may have added, but if you look at my position size, it's relatively small compared to how I typically trade. So with that said, although it's an add, it's not really an average down. It's more of an average in slowly with a much smaller position size than I typically would have, because I'm expecting potentially big move. And at this point, when it starts to grind, I want to be buying the dips and just set it and forget it. Let it go. Be patient with it towards that 8 magnet, because we know that this thing has a huge history of running. So I suggested in chat, some of the people that may have started in and they weren't looking to scale like I was, where they started in with one size and then they were freaking out at 750. Well, you're back in the money now. So go ahead and size down if you weren't expecting to be up and down a little bit of money as you've seen so far. And that's one thing that I typically do is, sometimes I'll start into something and I had a plan and kind of went a little bit lower than I expected, and I was down maybe $1,000 or $2,000, and that wasn't my plan. If it starts to ramp back up towards my entry, I'll go ahead and size down if I had any ads on the dip, because I can always re-add as long as it proves what I was thinking as correct. And here it comes. You can see the big volume spike on that 8 mark. And we always talk about those whole and half dollar marks that really bring the attention, bring the audience. And that's exactly what you see here. So I went ahead and locked in my main trading account. And then I just want to be as patient as I can. And as you guys know, I have a very, very tough time with patience, especially on a long. Nothing wrong with paying yourself into a 50-cent move. It's what we're here for. We're here for a little paycheck. Yeah, you're supposed to let your winners run, but heck, if you can go ahead and lock some in here and there, nobody ever went broke taking a profit. Went ahead and locked a little bit in. This is one reason why I encourage locking in a little bit of profits into the big runs, because when these things do start to pull back, and look, this is what they do, they trend along the way. But when they start to pull back, you're less emotionally tied to it, and then you actually let the trade work out how it should. A lot of times, if you look at it and then you see one big spike down and you react and you sell into the washout, well, you're just kind of falling for the pullback, which is normal on an uptrend. It's healthy for a stock to pull back, shake out the week, and then carry on and put in new highs. So if you're emotionally attached to the trade, it's best to lock in along the way a little bit. It helps me with a little bit more patience. If I was in full size, there's a good chance that I would have just ditched it all right there. Not that I have good patience along the way, but either way, when it's strong and everybody wants it, I always like to give myself a little bit of profit. It had a lower high, so I locked in a little bit more, but as you'll see, it doesn't really matter. It pushes through new high days. And that's it. Went ahead and sold the rest. Happy with the profits. The biggest thing to understand about this stock and the ones that we're trading is the days that we trade them. And this thing's got 6 million volume now. It's got a major move. And it's these types of stocks that we're interested in on any given day. And we don't want to fight against the trend. I'd rather join the trend and just let it go. So you can see just how active this stock was. Nice big gap up pre-market. That's what put it on our radar. The plan that I had was the 750 washout. So it was opening around that 8 area. I wanted a big washout. If it was around the 780, 770, ideal goal. Quick washout, accumulate that dip, and then add to a winner. ABCD comes in different forms, but you've got that morning move, pulls back, ramps up, higher, low. So now you can be buying all dips with a risk on that 750 over and under. And then as you add in more and more, obviously you're going to bring up your stop higher and higher. So as long as that trend holds, you're good to go to be patient with it. It ended up closing at the highs. For me, emotionally wise, if I was in full size and whatnot, I probably would have been shaken out on this dip. But that's the thing, is a lot of times these things will just go one way all day. And if you can hold from bell to bell, patience pays. So you can see here on the daily chart, now the next day, if I was looking for a play, I'd want a potential weak open and then get long for red to green through 850 or 9. And there's a good chance that it's going to rip through there because now it's testing that prior chart resistance, actually a little bit above it. You can go all the way back to April where it's starting to bust through that prior high. Yahoo is a perfect example of a beat chart. Now this stock was reacting to Baba, the Alibaba IPO, BABA. Now Yahoo hasn't done anything spectacular in the last couple of years. Pretty much all their eggs are in one basket. I think they own 25% of Baba or something like that. But this was all anticipation of the big IPO. And the higher it was going to open, the higher it went, the better. And this ended up going from about 36 to almost 45. If Baba ended up being anything short of spectacular, there's a good chance that this is going to pull back because this was all sympathy move towards this heavily anticipated IPO. So what I want to do here is be able to take advantage of a weak open washout. There's a good chance that if Baba rebounds and if this thing washes out, it was just 44, now it's 38, it's down $6 in a couple days. The ideal goal is one of two things, either a washout in the morning, or if I miss that, look for it to consolidate, start to grind up with a set risk versus reward off that 38 level. Pre-market's kind of hanging out. We're still early here, 847. You can see that 37.90 sort of put in a base support and it's floating around the 38 level. So typically for me, what I want to see out of the morning is a break of this 37.90, because it's likely that if it washes out under this level, it's going to come snap right back up, consolidate, and grind back up towards the 38. Not always, but very often I use pre-market and after hours as sort of a guide to judge where, hey, this is where the resistance was last night, or this is where the support was last night. And it's likely that it will end up coming back to that level if it's a situation like this. So you can see I tell the chat nice and early that my goal is a washout rebound. And I start yelling at Yahoo that I wanted to get long into a washout. I didn't want this thing breaking out pre-market. I didn't want this trade running away from us. I got a tiny bit of Yahoo long, and keep in mind that this is one of my favorite types of long trades, a washout. So I'm anticipating a washout. Ideal trade for me is a 38 wash. So just in case, ideal entry is that wash, period. So this is a play that I like to risk on, and I might already have 2,800 shares, but it's worth the risk under 38 to go ahead and stay long and buy that washout. So we're getting very close to open here. It's 9:29. You're going to start to see the volume spike up right at the open, over 1 million shares already. Went ahead and added a little bit into the wash. Added more. Don't forget what I said pre-market. 37.90s was the guide. Starts to ramp up. Every scalp out of the gate, no matter what, you should always lock in a little bit if you nail it right away. Pay yourself, because the trend can change so quickly. You could be dead right, and then 5 minutes later, dead wrong. So I always like to pay myself a little bit, especially out of the first 10 to 15 minutes. So I went ahead and locked in a little bit. Locked in a little bit more. Just going to hold the remaining 1/3, give it a chance. On a trade like this, what happens is most people are obviously investors in Yahoo. So they come back to their computers that night and they say, oh man, this thing came down, I gotta sell. And at the open, there's a bunch of market orders to sell. Take their profits. Got to take it before it pulls back anymore. So that's exactly what we took advantage of this morning. Locked in a little bit more. It's very close to the red to green test. If you remember, this is a lot like the BBRY example where not only does it start to grind up towards a red to green, but a potential whole number. So something like as soon as it hits green, it's going to break through 39 and parabolic. Likewise, with that BBRY example, it's about to break through that 10 mark. Every time you can couple all these different things, it's going to be a different audience. Red to green, a whole number, a 52-week high. The more things that you can couple together, the better the breakout you're going to have because the bigger audience is watching. So it failed to break through and hold that green, so I went ahead and locked in, as you know I am notorious for doing. And now I will watch it rip to new highs without me. So again, here's the daily chart. Should start to look familiar. Take advantage of that weak open washout on a very beat chart. It doesn't mean that it has to bounce. So you need to understand that so that when you're buying that washout, if it does not immediately rebound and it starts to slowly fade off, fade off, fade off, much like the Moby example, you need to size down. You need to let it tell you what it's going to do. There's nothing wrong with taking it off, being patient, and then waiting for the next setup. VII, big former runner. And you can see, talk about float rotation a lot. Everybody remembers, hey, I remember that thing. It ran to $6 just last month. So that's what's in the back of their head. And then they start to see this thing running and it's $1.60, $1.70, $1.80, and they say, holy crap, if I get in long here, even if it goes halfway to 6, that's still $3. So everybody gets excited. You can see that there's quite a nice move in the middle of the day. Nothing I'm really interested in unless it holds that trend. I'm not somebody that wants to be buying at the 180s when it was just 160s. What I want to be doing is looking for a pullback, see if it holds trend. And if it does, then I have a better risk versus reward. Let it tell us that it's going to run. So it starts to pull back, and then it starts to grind back up. Now, instead of just buying randomly, where we might emotionally get shaken out into this dip, now if we wait, we're patient, we can start to buy the dips on the trend hold with a much better risk versus reward, where we're only risking potentially a dime to the prior support. Same thing again, dip buys. What I want to look for on a trade like this is a gapper. We're into the final hour, into the close. People are going to be looking for a potential overnight position. It's a thinly traded stock, so I don't alert these in the chat room. Anything that could be influenced by one or more people, we don't want people alerting in the chat room. What we want is liquid stocks only. So I don't have any problem writing the plan and what people can look for, and then they can make a decision on their own. Because especially these lower float stocks, if they can't make the decision on their own, they should not be trading them. So VII, possible overnight for gapper. Won't alert the entry, it's way too thin, but I'd be looking for dips and a risk based on this level right here, 180s. And the reason for that is because 180s was the prior resistance at this level, and now it should act as support. And if it doesn't, I don't want to be in. You can see it just starts to trend, and you can see how thin it is, and you can see how the wicks, where it might be 5 or 10 cents along the way, and the same thing over here. So you have to make sure that you're trading a size that you're comfortable with, because if it pulls back 7 cents or 10 cents and you freak out, then you're just going to sell, and you're going to take a emotional exit versus something that may or may not make more sense. And this actually has the SSR on. So anytime that there's a push, typically the bids just drop out, pulls back, and then consolidates and heads a little bit higher. Anytime I take a stock for a gapper, if it starts to go wild into the close, if it starts to go 215, 220, 250, I'm going to be locking some in no matter what. I'll still hold some overnight, but there's nothing wrong with paying yourself when it starts to go buck wild. A trade like this, once again, it's about combinations. You're anticipating that 2 break, you're anticipating the high of day break, and it's a former runner on the daily chart. Went ahead and locked in a third. And the reason that I like to lock in into these big moves is the original idea is to be a gapper. Now, if it starts to go and it starts to go wild in a close, that means it's a crowded trade. And for me, I like to take the contrarian trade. I don't want to be part of the masses. I don't want to be, if everybody's long, I'm long. I want to be selling when everybody wants it. You have to think, if everybody's long and it doesn't do what everybody's anticipating it to do, everybody's going to be a seller. So you need to be smart about that entry. And if it's a very popular move into the close and everybody wants to be overnight, you should always lock in. Went ahead and locked another 1/3 in. And here you go, another look at the daily chart and what it looks like after. Volume comes back, as you can see down here. That's what we're interested in. We're not interested in a potential rebounder if it's got 100,000 shares. We're interested in if it's got near 1 million, 2 million, 5 million shares. That's where you're going to get the big moves. That's where you get the liquidity.
So right now we're looking at the next morning pre-market. And as Nate was mentioning in the previous clip, given the super strong close, I was a little concerned it could be a bit of a crowded trade. You can see if he was early up enough, he would have got $2.40 and $2.43 were the highest prints. But this started sort of printing down. And towards the bell, it has one last shove towards the 220 area. Nate closes it out there for a total of around $2,000 profit across the course of the whole trade. And although it didn't gap and go, Nate had a plan and executed it. Took his profits off given he had a high $1.80s average. Nice low risk, high reward kind of trade. And as you can see on the daily chart, this thing never got legs on the second day and pretty much went back to where it came from.
CLF is a perfect example of what a multiple time frame breakout is. Now, this particular stock, we were waiting for a breakout towards the 10 level. And there was a couple days, about 3 days prior, I've been anticipating this potential 950 breakout towards 10. I want to be long for that breakout because I know that once it breaks this peak here at the 970 level and ideally that 10, it should react quite positively
potentially squeeze because it's had a huge fade over the past year. So everybody is waiting for that first moment that this potentially may finally reverse. The idea behind the multiple time frame breakout is when you can not only line up the ABCD type breakout on the intraday chart, meaning the 1 minute, but also on the daily chart as shown. So when it looks like ABCD starts to grind up and anticipate that breakout, if you can do that and line up on the daily chart, you're potentially in for a very nice breakout. Because keep in mind, the more things that you can do, that multiple time frame breakout, the whole number breakout, trend reversal, more things that you can couple together, the more audience you have. Therefore, more amount of traders, bigger the volume, bigger the reaction. And that's the trade that I want to be in. Now you'll see CLF starting to ramp up here. And I had started in just a starter position. And the idea behind this stock is weak opens red to green. That's what we want to anticipate. We want to anticipate that push towards that 950 break on the chart because that's the multiple time frame breakout, and then anticipate the 10. So I started in. I also accumulated down in the 9 area per the plan that I put out in the chat room in my E-Trade account. And then I added a little bit to a winner because it started to grind up. Now the volume started to come. That 950 level, I want to see over and under hold. And if that's the case, then I'm going to go ahead and add even more. As I wrote in chat, added a little bit more. And it doesn't show the candle here because it's in my E-Trade account. I like this chart because you can risk towards 930s, or if you're in full size, you can risk towards the 940 levels over and under. Keep in mind this is adding to a winner. So at this point, you can add to your 920, 930 average and let the house's money work for you. This entry wasn't the best, but the important thing to realize is the idea is to accumulate with a 9 over and under idea as the risk. And that is what kept me in the trade because I knew that as soon as this did break red to green, there's a good chance that this trend continues.
So right now, Nate's E-Trade account platform is off screen. However, he's about to pull it into his main trading screen, which is the one that we record on. And you'll be able to note the average on his position. It's around that 940 area just before it started breaking out. Anyway, I just thought it was worth mentioning to show that he's not actually entering a new position. It's just showing up that old one that was off the screen. Anyway, back to the action.
You see the ABCD setup. You've got that morning gap, pulls back, higher low, starts to grind up, a top here at that 950, breaks out, brings the volume in, and away we go. As always, just suggesting people lock some in along the way and that I'm trying to be patient myself. Now the volume's starting to really pick up as we're getting near that 10 mark. Here comes the 10. Starts to sit at 1020. I'm going to go ahead and lock some in just to pay myself. And you'll see that it halted. Now, this is a perfect example, and I wanted to put it on the DVD for multiple reasons. One is because the ABCD style breakout. Two, because the halt. Now, this is a circuit breaker halt. And anytime a stock runs up a certain percentage, the exchange can halt it just to protect against extreme volatility. After the flash crash, it would have helped if there was an opportunity to halt the markets. So they've added this to go ahead and just, hey, is everything okay? And make sure that things are okay. And then 5 minutes after that, it goes ahead and opens up, which usually when there is a volatility halt, a lot of times it will end up gapping up a little bit higher. You can always go to NASDAQ Trader and find out which stocks are halted. So now it opens up, starts to ramp up. You'll see I start to take off the position. It's nice, about $15,000 trade. Trying to be patient and can the rest of them right here at 1050. I have 5,000 shares left in E-Trade. And you know me, once I start selling, I lose my patience. I like profits. Nice continued breakout. So that's a perfect example of a multiple time frame breakout. You can see the volume again on the 11s, but my trade's done here, took the profits, and that's it. You can see here on the daily chart, when it did break, the volume that it created that day, and since that time, it's been straight up, slowly gearing up, gearing up, gearing up, and it's actually setting up the same way that it set up at 950s, it's setting up at around 1150s. So on a weak open, red to green, if there's good volume and it breaks at 1150, I'll be looking for the same exact breakout again and potentially get a 12 to 1250, maybe 13 style run.